moment. All right, let's get to house prices. The latest data on home prices has a screaming message for buyers. If you are waiting for prices to drop, they will not. The S&P CoreLogic Case-Shiller Index revealed that U.S. January home prices rose 19.1% year over year, leaping past the 18.4% estimate. That 19.1% jump marks the fourth largest annual gain on record. Home prices and rent inflation now have former New York Fed President Bill Dudley calling out Fed Chair Jerome Powell. In a Bloomberg op-ed, Dudley says that skyrocketing prices in all realms, not just home prices, show that the Fed's framework is behind the eight ball in controlling inflation and has the U.S. economy barreling toward a recession. So let's just say he's right. With the red-hot housing market showing no signs of cooling off, will the real estate market still be attractive if there were to be a recession? Joining me now, Swapnil Agarwal. He's the CEO of real estate investment company Nitya Capital, which has a portfolio of more than 20,000 apartment units and 2 million square feet of office space. Swapnil, you know what Dudley's talking about here, and we can see it in the Case-Shiller number. Home prices are rising at an even faster pace than inflation, which is already at 4-decade highs. That number, though, the Case-Shiller, is from January, so it's lagging. Today, give us today, do you see any sign of prices cooling even just a bit?
You know, Liz, first of all, thank you and pleasure being on the show. Look, the home price is rising. It's not something that we did not expect, right? You have, tons of liquidity in the market. The mortgage rates were really low. But what we're starting to see now is cool off because of other macro reasons, which is, if you see now, the average home price or median home price pre-COVID was close to $272,000 if you look at the average of the country. And now it's gone over, $408,000. So your down payment has substantially increased, which is pricing out a lot of people. And now with the mortgage rates going up, it's going to become even more difficult for a lot of people to buy homes. So in my estimate, I think by year end, you get back to normalized price increase around 5 to 6%.
I'm glad you just brought up mortgage rates, because I think that people need to understand that back in January, mortgage rates for a 30-year fix were averaging around, 3.76 or something like that. Yeah, now we're looking at, according to Credible, 4.875% for a 30-year fixed mortgage rate. Are you seeing any change in behavior with these rates rising?
Definitely, Liz. I think what we're seeing is that the dream, the American dream used to be, buying a home. But given that, right now the prices are so high and now the mortgage payments have gone up substantially, is pushing a lot of people to renting homes. So either homes or apartments. A lot of these migration to Sunbelt states is also happening. So it's a mixed bag. You're on one hand, people have, the wages have gone up. But if you look at the mortgage, the monthly mortgage divided by their total wage, it's at the highest after 2007, and we all know what happened after 2007. So I think that it's just pricing a lot of people out. The wage growth hasn't kept pace with the rise in the mortgage and the inflation.
Clearly.
That's the bottom line.
Clearly. How do we make money in this atmosphere? That's what your business is.
Yes, look, we own, tons of apartment complexes and multifamily units across the country. If inflation is the biggest fear, hard assets or real estate is where the returns come from. If you look at last 50 years of history, the rent growth has always outpaced the inflation by 80 basis points. So, look, in an inflationary environment that we are in currently, there's no better place for people to invest than real estate.
Well, that's what my dad used to say. Yeah, it's long term, though, if you can afford it. And rents have been skyrocketing. So as we watch this story, we'll be watching everything that's happening in the real estate realm. Thank you, Swapnil. Good to see you.
Thank you, Liz. Pleasure being on.
From home prices jumping to oil prices, you'd think with oil prices